Hi, I'm Devin Brumbat and you are listening to my not so profound thoughts. So maybe I'm late in talking about this and maybe I'm late, but I didn't intend to create this video. But looking at the current scenario and looking at the investors also, I thought that I must create the Paytm Fiasco video that happened to the retail investors especially because what has happened over a period of time that when the IPO came, the Paytm shares tanked 27%. So it is a huge disappointment in the market, and even SEBI was astonished by what happened into the market. So what actually happened was, if you see, 75% of the promoters exited their load and gained from the IPO by uh, anchor investments or any other types of investments. And the retail investors, which are still invested in it, they lost their money to a substantial amount, wherein the Paytm shares are below 1000 rupees. So, what happened exactly? So, during the IPO, there was a speech by Vijay Shekhar Sharma. He failed to mention that how the company will grow, in what areas will it grow, in which particular segment he thinks that he can be market leader, and how the company will be profitable. So all these are the fundamental things that a founder must have made a clarity, that I believe that if he had said so, that the return expectations from the investors would have been different, and the scenario that is right now would have been particularly in a different manner itself. It might happen that the Paytm shares would be still the same as much as the listing price, or more, maybe more, if he had mentioned how he wanted the company to grow, but he failed to do so. The other things that I see regularly in the startups, we all know that majority of the companies such as Zomato, which we say startup, it is not right now, they are called businesses, such as Paytm, which are non-profitable, Zomato, which is non-profitable. We even see Byju's, that is not profitable. They are all burning cash and trying to acquire market share rather than focusing on cash flows from operations. So, what is cash flow from operations? It is the, if we look at the traditional business, if you are even trading, so the material that you trade and the cash or the profit you generate is called as cash flow from operations. So any traditional businessman would have a focus to generate more and more cash flow from operations. But rather, the startups, what they are doing is they are burning cash to acquire market share, making expenditure more and more, pumping money, generating more and more valuation in the name of equity, and trying to acquire market share and customers. So there is one problem which I find, that there is no customer loyalty in this. They are offering deep discounts, they are offering other things. Why, if you use Paytm, you will get a cashback. If you use Google Pay, you will get a cashback. If you use Byju's, then you will be able to score more than the others. And they are substantially increasing the marketing expenditure even more than that what they are earning. So there might be times that they are spending 500, 600, or 700 rupees to earn just 1 rupee. That is the scenario that is happening in cred itself. So even the Paytm has focused on this, and it has lost its market share. So now if we look at the scenario of the Indian, wherein our notes were banned, the 500, 100, the new notes were given, the 2000 notes were given, the 500 notes were banned. So what happened during that time? Paytm gained as a wallet. So currently, if we see that Paytm as a wallet is a market leader. But still, over a period of time when the UPI was introduced in 2008, it has gained a market share and people are shifting to the UPI itself. And the wallet system is losing its market share to UPI. And even in the UPI segment, while the Paytm was first, it failed to capture a substantial market share, and PhonePe is leader, followed by Google Pay, and then comes a 14% market share of Paytm. So if I combine PhonePe and Google Pay, they capture 80% of the market transactions in the UPI that is happening as of now. So now most of the people think that okay, this is okay, that it is not a market leader, but it should generate at least a substantial revenue. Now, other phenomena that is happening is in order to grow or in order to remove competition, I can say that in order to remove competition or in order to create a synergy, which they believe the companies say synergy. I don't know what does it mean and how it is impactful by acquiring companies in the similar segments wherein they are profitable. So Paytm acquired lots of companies. I know that it acquired Nearby, Insider.in, then Shop City, and all this are basically on online to offline retail experience, ticket booking sites, event booking sites, then hotel booking sites, and all. So it acquired in the name of synergy. So now what happens when you start acquiring? So it becomes the habit of the startups to acquire company in the name of synergy. If you even see Byju's or any other startups, you might see in newspaper or read in newspaper that this company has acquired this company has acquired so-called startup in at such a valuation. This company has acquired so-called startup at a particular valuation. So why is it happening? So when you go to when these startups go to bankers because they are the ones who lead the mergers and acquisitions. So when you go to bankers, the and you say that whether it will be profitable or whether it will create a synergy if I invest in that company and purchase it. So how do the bankers earn? The bankers are going to earn only if the deal happens. If the banker says that no, the deal is not good, then they are not going to earn a substantial amount of money. So majority of the bankers are going to say yes that this is going to be a good thing for your business. And majority of the startups forget to focus on their core competency and start acquiring businesses in order to gain that employees for their experience or the founders for their experience and all. And they acquire and they fail to generate a substantial amount of revenue. So this has been happening with Paytm also. And for that reason, I keep on telling my friends and for all those who ask me that whether one should invest in Paytm or not. And even if they invested in Paytm's IPO, I told them to exit at that particular moment itself when the Paytm crashed 27%. So even if you haven't exited as of now, it is right time to exit right now. So don't wait for the share to go much below that. It can go back to 1500 also. It can tank more 50% also. It might go to 450 or 500 also. It can go to 2150 itself also. But what I'll suggest is remove that money from the investment that you have made in Paytm and invest in some business that are, we can say, traditional business, which is generating substantial amount of revenue. So now if we compare, as I told you, in UPI market, uh, PhonePe is the market leader. All the segments which the Paytm is targeting, let's say e-commerce. E-commerce, Flipkart and Amazon take majority of the market share. So competing them and generating revenue out of it is nearly impossible because even Amazon and Flipkart both are burning cash to have market share there also. Then it acquired a firm that is in a similar segment, such as the Byju's and Simple Learn and Unacademy. So even you see that you know that Byju's is still Byju's, Unacademy, and other startups are also failing to generate a substantial amount of cash flow and burning cash. So even in that segment, it is not a market leader and is burning cash. Then comes into insurance and general insurance things. What is happening is, if you look at private sector, HDFC Life has the majority of the market share. If we bring on public sector itself, LIC is the major market. LIC has the major market share. If we go to finance, that Paytm has started Paytm Postpaid and Paytm has started giving finance up to rupees 2000 to 5000. So many consumers or many retailers are not using it because nothing is going to happen in 5000 rupees. They are easily able to get even the Mudra loan or something else. And let's say even if they have finance, the substantial amount of market share that is available with Bajaj Finance and FinServ. So even in that segment, it is not a market leader. So overall, if we see that Paytm is not market leader in any of the segment, and that is why I believe that the fiasco that has happened because of all the reasons that I conveyed in this video. So that's all for today. Thank you for listening.